Trading is stressful. It's part of the game. And that is why having a mechanical strategy will alleviate a lot of this stress. There are also 3 truths that each trader needs to know and understand. I had to understand it the hard way. Number 1 is that the market is not out here to get you. The market is just doing its thing. It's not right, it's not wrong. It's just printing out the behavior of traders and the behavior of the market. Now, what you see at 9:30 is what every trader in the world is seeing. And so it is just your own perception of the market that is either right or wrong. Number 2 is that trading in itself is conditioning yourself to respond a certain way to a specific stimulus. And this is what I mean. When you see a particular pattern, then you take a particular action consistently. This is what trading is. Number 3 is the mechanical strategy. If you cannot code your strategy, then there is a lot of vagueness in it. You need to know exactly to the point. If this happens, this happens. If this happens, this happens. If this happens, this happens. Simple. And that brings us to my strategy. I have a free mentorship program teaching this same strategy. Link will be in the description. Check that out. Now, Monday sets the high and the low of the week. Like that. That is where everything begins. Now, on Monday, anything can happen. So, in my timing window in the New York session, what I want to see is a breakout. And just to clarify my timing window in the New York session is from 9 to 11. So, this is 9 to 11. What I want to see is a breakout of the high of the day. This is on Monday, which is also coincidentally the high of the week. Once I see a breakout and then the next candle is a reversal. It's simple. This is my pattern. And as we said, trading is identifying a particular stimulus and training yourself to respond a certain way. So that is why every time I see this, I am executing, regardless of whether I'm right or wrong. My job is not to be right or wrong. My job is to respond a certain way when I see a particular stimulus. Alright, so Monday, anything can happen. So we have the breakout and then the reversal. Now, as the week evolves, on Tuesday, 2 things could happen. Price could break out. So, say for example, that is Monday. Tuesday breaks out and it can close outside of the range, like that. That is what we call a breakout. And if we close outside of the high of the week, the probability price will continue in that direction the next day is very high. But if price breaks out and closes back inside of the range, then the probability of price continuing in the opposite direction becomes very high. So you can see it's very simple. If I have a breakout, it's continuation. If I have a failed breakout, it's a reversal. That is what I look for. Now, on the trading day, so we have a signal on Tuesday. So that means that on Wednesday is my trading day. And that is my high of the week there. So if I'm looking for a continuation of the trend, then what I do is that I draw the high and the low of the day on my trading day. So on this Wednesday, like that. So this is the open and the low, and then we have a high of the day. What I want to do is I wait for price to come back to this level, and I wait for the same signal in my timing window between 9 and 11. I want to see a breakout and then a reversal. Now this breakout, it can be 1 candle, it can be 2 candles, it can be 3 candles, you know, the stop hunt, the 1, 2, 3. But what I want is I want price to be at the low of the day if I'm buying, or if price comes to the low of the week. It's the same scenario. I will be buying, I will be looking for this pattern. And if it's at the high, then it's the same thing. I'll be looking for this pattern. Simple. Now let's look at real life examples. So we can look at oil last week. So I am using the 15-minute time frame, and I will show you an example of where I'm right and also where I'm wrong. So if we look at what was happening here, we have Monday setting the high and the low of the week, like that. And then Tuesday breaks out and closes outside of the range. Now, in my timing window between 9 and 11, price is inside. So I don't have any setup that day. I don't trade. Then the next day, price breaks out. And then in my timing window, still we are not at the low of the week because this is the low of the week. We are continuing to sell, and price did not come back to the high of, it did not really break out of the high of the week how I wanted it. So I want price to break out here and then reverse for the move down. Although we were correct, price continued going down. Now, price broke out and closed outside of the range, meaning we are continuing to sell. And so the next day, I am looking for an opportunity to sell. And you can see that we have, on this day, we have this nice pump to the high. Let's delete everything up to here. And then I am interested in selling at the high of the day, on this day. So in my timing window, let's draw a line so that you can see the timing window from 9, like that. So prior to 9, which is this candle, this is the last candle, it set the high of the day. That was my high of the day. So 9 breaks out, and then the candle reverses. So we have a breakout and then price reverses. So once I see this, this is my signal. Remember, particular stimulus, particular response. I go to the 5-minute time frame. Now, I am using 5-minute time frame for my entry. I'm using a 20 moving average, and what I want to see is price breaking that moving average to the downside. And price, this candle broke the moving average. My stop would be there above the high, and then I am targeting the low of the day. And this is a situation where I'm right. Beautiful trade setup. All right, now let's look at a situation where I'm wrong. Still same thing. This was a trade that I took yesterday on Tuesday, and Monday, so we go to the 15-minute time frame. Monday sets the high of the week, like that, and that is the low of the week. Tuesday, in my timing window, so let's delete up to 9, like that. So in my timing window, where is my high of the day? So this is the high of the day. I'm only interested in selling at the high of the week because we are at the high of the week if we break out. So what happens? Price breaks out and then gives me a reversal. All right, we have this nice trending market. It's not exactly like this one, but we still have this explosive move up. So we have this space where we might come back to later. All right, I go to the 5-minute time frame, and what I want to see is price breaking this moving average, and boom, we have our break there. That's my stop, and my entry stops above that level, and I am targeting the low of the day. Excuse me. All right. And so what happens? A very majestic loss. And that's it. I don't need to be right. I just need to be consistent in my actions when I am trading. This is what I define as trading. I have a free mentorship program teaching this same strategy. Link will be in the description. Check that out. If you got value from today's video, subscribe, and I will see you in the next video. Peace out.